Welcome back. I'm Marlon Bowling, your tour guide to the ag commodity trade, and we're coming down the home stretch of our trading week, and I want to get you updated on our current market activity, and I'll have a little surprise extra help this time around. We have none other than Ted Seifried in-house, in studio, to talk about the markets. And Ted, we have corn on July down 15 1/4 cents right now at 6.83 3/4. But hold the phone, Ted. We were down 20, I believe, about an hour ago, if not more than that. And now we're down 15 1/2. December, down 9 cents now at 607 1/2 per bushel. Let's look at our soybean trade with our quotes provided by Bar Chart. July soybeans still down sharply, down 39 3/4. We're at 1504 1/4 per bushel. November down 28 at 1431 1/4 right now. We got below $15 there on that July contract, but you know what? It has clawed its way back above it. It has come off its low by about 8 cents. I mean, maybe minor victories? I don't know. We'll talk about that. How about on the wheat? Let's go to the Chicago wheat market right now. July down 3 1/4 cents at 680 1/2 per bushel. In that Kansas City market today, we have the July contract now only 4 3/4 lower at 635 1/2. You know, that's 11 cents off of our earlier low this morning. On the Minneapolis market on the spring wheat trade, July down 10 1/2 at 765, but we had been as low as 748 3/4, Ted. We're off of that by, what would that be, about 16 cents, I guess.
Yep.
What's going on?
Yeah, no. Lots of reasons for the pressure here this morning. One, we had big rains rolling through the Dakotas. That was advertised. We knew it was coming. It might have been a little bit better than advertised. It might have gone a little bit further south into Nebraska than advertised. So that did have a little bit of pressure on the market. But the big surprise this morning, which I'm sure you've been talking about all day, is that the Biden administration apparently is mulling over the idea of lifting the RFS temporarily to benefit the oil producers who are struggling, apparently.
I like your adverbs in there. Temporarily,
yes.
supposedly.
Yes. Supposedly.
And that's a good way to put it, because we really don't know. And I hear some analysts talking about that, that it seems like the market is taking a worst-case scenario approach to this, at least up until now. And now it seems to maybe be levitating upward a little bit.
Yeah, absolutely. And keep in mind, we still have a rather threatening forecast for next week. So that's what's really come back into the market as the days moved on. But yeah, it's really kind of hard to believe that the Biden administration would want to do this. That's why it was such a shock here this morning, because they're really anti-fossil fuel. This is not the business that they've been in, leading up to now. So I think we're kind of maybe looking at that with a little bit more of a skeptical eye as the day has gone on. But, I mean, look at July soybeans under a tremendous amount of pressure. Biodiesel is a concern. Still kind of reeling from the report that we had yesterday and the idea that maybe we're not going to run out of soybeans this marketing year.
All right. Now, what about wheat? We have wheat harvest starting to get underway. I know they had a lot of rain in Texas that shut everything down for a while.
Right.
But you get into the higher plains area, and they didn't get as much rain. And now I'm hearing in Oklahoma, I think the wheat is pretty much ripe. If it's going to be showing temperatures in the hundreds next week, I mean, it's going to be full speed ahead on wheat harvest, I would think.
Yeah.
Isn't that going to just kind of torpedo the wheat market for a while?
Well, it should put some cash pressure on the wheat market, as we always do this time of year. However, it'll be interesting to see what we're hearing for yields. Remember, we had that wheat tour that came back with really fantastic yields.
Oh, yeah.
Now, now if we get into harvest and yields kind of start saying maybe that was a little on the high side, which I'm wondering if it might, just from all the adversity we put this wheat crop through, that could actually give some bullishness to the market. And a lot of it's going to depend on what happens with row crops too. Corn in particular. If corn resumes an uptrend because a hot and dry forecast lingers next week, then I think we can follow. But it's going to be paramount to see what that forecast looks like when we get to early next week. This is the time of year that if we have a forecast pattern change, or a major pattern change, it's probably going to happen in the next 10 days or so. I think about 2016. I was actually sitting here with you in 2016 doing this. That's the last time I was here. Our forecasts looked very similar, very hot and dry. But 5 days later, they had changed to being quite a bit wetter. Still in the heat in there. And then we proceeded to have a very warm and wet July and August, and we ended up with a new record national average corn yield, one that still stands today. So I think the market realizes that this can turn around. There are some areas that won't really come back well, But on a national scale, we still could have a very good crop if that forecast pattern, or if that weather pattern changes in the relatively near future. It's got to happen soon, though.
That's a lot of ifs right there, and we'll find out the answers within the next month. All right, we're talking with Ted Seifried. We'll pause for a break. We'll have a look at our livestock trade next. We're back with Ted Seifried of Zaner Ag Hedge in studio. He's right here in Nashville. Thanks for coming in. Good to see you again. As you mentioned, it's been like, what, 5 years?
Yeah.
Amazing. So anyway, let's take a look at livestock trade. We were coming back a little bit when we checked on the grain side. Let's see what the cattle are doing. Well, how about this? August, October, December, February, they're all at least $1 higher. August now up 147. We're trading at 120.02 per hundredweight. That would be off of our earlier high by roughly about 55 or 57 cents or so. Let's take a look at this feeder cattle market, see what it's up to. We have the August contract, $2.77 higher. We're at 151.17 per hundredweight. But we're still roughly about 75 cents off of our earlier high of the day there. So gave back a little bit of ground, but still sharply higher. Lean hogs have an issue, Ted. We have the July contract at 120.07, and that is down $1.25 today. We're just getting further and further away from those earlier contract highs back on Monday. Does that spell trouble or not on the chart?
You know, we had spent a couple days holding sort of up here, but this is now not great. We are breaking through some of the really shallow support areas. It looks like we could have a pullback down to about the 113 area from here if we close down here, which it looks like we're going to. So I think there's a little bit more softness, but that just brings us to the bigger uptrend line that we've been in this long-term bull market that we've had in the hogs. And fundamentally, I'm not getting bearish hogs just quite yet. So I do think we were due for a correction. I think this is the start of it, but I think it'll be a fairly shallow correction. And then I think we can turn and possibly make new highs again. I'm really impressed with how the cattle's acting today. Yes, we look at a little bit of weather. We worry about some really hot temperatures. But in general, you look at the chart, we had the spike lower based on the JBS, cyber attack and everything like that. We've recovered nicely. We held support right where we needed to. Now it looks like it wants to try to break out to the upside. We have to see if we can get cash to lead the way or not. That's always the big question, and the question we've been asking since the beginning of the calendar year. But the chart looks good and ready to try to find those higher prices again.
All right, and one thing I did want to point out before we wrap up, I was checking some charts a little bit ago. Do you know the only one that has broken the uptrend line back on the grain side is July soybeans?
Yep.
Everything else is still in an uptrend. Just wanted to throw that out there,
That's right.
just for something to consider over the weekend. Ted, good to have you come in and visit. I appreciate that very much.
Thanks for having me. This is so fun.
We'll talk on the evening news tonight, too, if that's all right.
Sounds great.
Thank you much. Ted Seifried of Zaner Ag Hedge with us in studio. Tammy?